So hedging on a swing basis really is going to delay the time between when you take an opposing position. So if you're long and you need to hedge short, you might find that it takes a few days at least for you to get back to a decent area where you can enter that hedge short. Typically that's going to be at some kind of resistance level. Now, hedging can be done on any time frame and with any trading style: scalping, swing trading, intraday, investor trading even. But it's just all about how you apply that knowledge based on market ranges that form on every single time frame. If that sounds confusing, let's do a demo on the sim. Don't forget, if you want to learn how to do this, go underneath the video. Also, you can join our free Discord. Let's jump into it. So let's look at how to swing hedge. This is a bit of a slower approach, so it can be digested a bit more easily. Essentially, instead of looking at lower time frames, we're going to be looking at the longer term market and how we're going to hedge between moves to basically sustain ourselves within the vast market swings. Because you've got to remember that markets overall are literally pivots from what is a good price at one time to a bad price at another time. Okay, so buying down here was a good time to get long, obviously, because you had lots of long side investment and long side bias and therefore volume to the upside. And of course, that was a worse time to buy up at this point, because you then got the market fall the other way. And essentially, you got short side traders piling into the market to deliver that blow that pulled you back down. Okay, so this is going through the midst of the financial crisis. But coming out of that into 2013, you can see the market trajectory on a swing basis is a lot more tighter. In other words, the difference between what was a good sort of price to buy long routinely and a good price to sell based on market activity and trader activity coexists within this range, which I've just drawn, which you can see is 82.7 into 78.28. Okay, so a reasonable amount of room, obviously, and one we can look to negotiate via swing hedging. So to start things off, if I look at the daily, I can see I'm coming sort of back up to this range, more or less. I would probably like it a bit higher so I can short if we can get there. So I'm going to let it play a little bit to the upside. Okay, that's decent. And before I begin, thanks to those who are enjoying these videos and like and comment. Remember, if you want to learn how to trade for income in this format, simply go underneath the video and you can learn how under there. I'm going to keep the max size in this case at 1. Okay, so 1 standard. I'm going to take a 1 standard there because price is relatively high. And we can look to manage this as appropriate over time based on the drawdown that we accumulate. So the push we're getting now is taking us back to highs. And I've got the opportunity really to decide now, do I want to take a small hedge just in case we rally above the high? So in other words, this pullback that will probably take us to this area of now key support. Okay, so what was former key resistance? Will that rebound and take us higher? So just in case it does, and as per our hedge method, I'm just going to take a lighter size in there. I think I'm going to have to use the arrow just to pull it down. I'm going to go for 0.2 at this point, and I'm going to take a little piece long. So I've essentially hedged 1/5 of my market exposure. Obviously, before we had 1 standard in play, and you can see now the market is pushing very, very well through. So I'm going to add a little bit more than the previous long, okay, because the price is now lower. I'm always deviating my size based on where the price sits at all times, because obviously the probability of success is continuously changing. Now, I've got the opportunity to kill this short if I want to. Okay, I think I'll actually leave it on because I've got a couple of hedges higher up anyway. And I will just kill off that hedge long that I formerly took, and I'll just replay again. Okay. And now we're getting a drop again, back under that one standard short. Okay, any sort of significant fall again, and I can consider managing that entry. At this point, I'm going to add another 0.2, or in fact, just a little bit less, I think, based on where you had the previous long. And I can kill that off for minor gains as well, just as another hedge long. So you're now seeing how I'm managing the exposure on that one standard by simply re-hedging this level. Now I'm viewing it on the weekly, which means days are ticking by, and that's essentially how we're taking a swing basis. But I'll zoom in on the daily now. I've just killed off that other hedge long for more gains. And you can see now what we suspected may happen is occurring, and hence the drawdown is rallying. Now we've already taken some gains, which is going to soften the blow on the drawdown, but there's another one there. And if you look, $80, okay, yeah, doesn't seem an enormous amount, but if you compare it, really, you're only going to have to do that 30 times to wipe out that loss. And I've already done it several times so far already. Okay, so another push up, okay, delivers a little bit more hedge gains, $86. Okay, do I want to add any shorts? Well, I won't, just for the purpose of the video. I'm really just trying to show everyone more or less how you would hedge if you got something wrong. Okay, so there's another $133 hedge gains. Okay, it's just a demonstration of really how you would escape a bad trade. I can kill that one again. So I've already accumulated a fair few hedge gains. Any real drop lower and I can hedge again. And I'm just sustaining the rally. Now, I do have the option to add short at this point because the price has gone a reasonably far distance away. It's a good idea if you're going to add a late entry to just check your higher time frames. You can see we're slightly further above the highs seen over here in 2007. Okay, so I'd be happy just to add a bit more. I could add another, let's say, 0.75. So nice drop immediately there, and that is called a DCA gain. I can now add another light long, okay, just to protect slightly in the event we just rally straight back to highs a little bit. Okay, we're getting some reaction to the upside, which I can close again. And you can see the equity is now still only 2% down. I could add a short again. Okay, let's say 0.8. Okay, so keeping it fairly reasonable. I don't quite want to go the same as I did before. But you can see $1,000 there. And now we're getting back nearer to positive equity. Now, instead of taking a very, very light long, I'll take something like a 0.3. Okay, which is a reasonable size just to protect. There's another $110 there. And slowly we're working our way out of being in a negative position and transitioning into a positive one. There's another $200. Okay, so every dip back, I can look to hedge just to cover my risk in case we just keep going to the upside. All right, so another 0.3 in there. You can see we're now getting lots of hedging opportunities and hedge gains. And if we just keep falling, my P&L will now go into positive. So it doesn't really matter that the hedge is failing. In fact, in many cases, we actually prefer the hedge to fail, as we say a lot inside our academy and mostly to our accelerator members. So I could add a couple of these 0.3 short just to give myself some short exposure. Now I've evened up my equity and I'm not in danger of any significant drawdown. Okay, so still trying to find its way down, but it's being sustained a lot. So I think I'll just kill those off. And still you can see we're now in a decent position. I'll add a couple more back again. Okay. And someone else commented again saying this is just random clicking. I don't think so. It looks like that if you don't know what you're doing, of course. But if you are familiar with how to hedge for income like this, I'm going to add another hedge there, then you won't see it as random clicking. You'll see it as very, very organized trading, which is exactly what it is. You have to be organized if you're using a hedging method, if you want to get things right. Okay, so I'm now going to exit that again for some gains. P&L slightly further up on the negative scale, but still nothing dangerous, and I'm still willing to just hedge where I can to chip away at that and take gains over time. You can see another nice hedging formation occurring now, which is existing like this, as you can see, either side, up and down. Now another push down. I can add another hedge long on about 70 pip drop, exit that for gains. Any significant push back up within that range, I can add, well, we didn't get that, so I can just add another hedge long. Okay, so at this point as well, I can kill this and kill that. Okay, couple of shorts just taken out, rebalance the asset we're trading with another hedge long. And if I get a significant push, I can look to add another long. Okay, so I've got one there, and I could have a look for some longer term support, which looks like we're coming to, some very strong long-term support, and I can just hedge long again. Okay, and now I'll just work the opposite way. So any real rally I can look to short, and there's a good chance I'll be able to exit my former short that I took and work my way out those former longs. Now there's a lot of resistance sticking here, so what I'm going to do is I'm actually going to kill this one for a loss. So we take our first loss, and it's just to tighten up the cycle, just to keep the market moving and breathing with us, rather than having it run all the way down to our short and us get nothing beneficial out of that. So at this point, I can actually look to re-add again. Okay, so I will do that. Added just another 0.4 on this radical drop. Now at this point, you can see the P&L is actually still positive. So I can close that off. And now on any significant rally, which is more likely because we've fallen so far, I can kill those longs, and essentially I can pull the cycle up so that we are in a net gain position. So at this point, I'm going to look to add a short. It's just going to be light because it's fairly early again. We're well in gains now on the whole move. So you can see how I survived, that complete drastic drift against me. I never got in any serious trouble. My hedging activity was just, allowing me to life jacket those former entries so that I was never, seriously at risk on any significant swing. Now, if I want to end the cycle and basically close all of this out for some gains overall, then I can just simply wait until there's a larger push to the upside. I can even just consider exiting that long in case, because now if you look, I've got 2.4s and 1.4 short. Okay, I could even, if I wanted to keep trading this, I could add short again, for example, and then on a fall, I could kill that off if I'm quick enough. There you go. So there's a bit more. And then I could add a long, I could add a short, blah, 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 all day. And the gains would just keep coming up. Okay, so net gains again, no problem. If you wanted to have higher results, you would just change the size and the amount of assets you're trading. Remember, although we've netted only this, the drawdown was considerably lower than most would experience. Obviously, if the sizes were higher or there was more entries, you would have higher gains. Or if you just traded more assets, you would have higher gains. It doesn't really matter. It's all tangible. The more profits you make, it's just going to be tied to the amount of assets and the size. That's it. So I do these on a very low basis so everyone can see what it's like. I mean, I could put the sizes up. I could probably run a multi-asset setup on here as well. I think it's possible. FX Tester online. But it's just easier for people not to freak out if they're just looking at a few $1,000 rather than 30 grand or whatever. Okay. So, like I said, if you want to learn how to do this for income every single day, go underneath. I'll see you in the next one.